Hi, this is Alessio. Hope you're well. Guys, check this out. The chart of the Dow is showing to us something very interesting. You may remember in my previous video, I showed you this chart and I pointed out this key level that you're seeing here, this yellow level at 34,115. I said, make sure you watch this level because guess what? The Dow has just broken below that key level. I have to be honest with you, I'm surprised it happened so fast. But in any case, the Dow has now broken that level. And here's the question. Does this mean we're likely going into a bear market? Is it potentially bad news for the markets? Join me. All right, guys, welcome back. Now, before I talk about this chart, you may remember back at the beginning of November, we actually were expecting a correction. You may recall from my video from early November, we were expecting a major pullback or a correction in the stock markets. And now the stock markets are delivering on that. So we were not surprised at all to see this pullback or this major correction on the stock markets. Now, the question is this. The question is, have the markets now broken a key level that I mentioned in my previous video? Is it likely that now the Dow has likely triggered a bear market? Well, here's the thing. According to Robert Prechter, by the way, Robert Prechter, if you don't know, is one of the best chart analysts out there. And he's one of the few chart analysts that I respect a lot. And according to his most recent newsletter, here's what he says. So Robert Prechter says that recent issues have stated that a break of 34,115 in the Dow Jones Industrial Average, DJIA, will confirm the start of a bear market. That is still true. Okay, so going back to our chart, that means, according to Robert Prechter's analysis, it is very likely that by breaking this key level, the yellow level I mentioned in my previous video, at 34,115, according to Bob Prechter, according to his analysis, we're very likely at the start of a multi-month and potentially a multi-year bear market. Now, I'm going to give you my own opinion in a few moments, but in case you're wondering why Robert Prechter believes this, you need to go and watch my previous video from back in the summer. You may remember back in June, July, I published a video, a very important video, which I highly recommend go and watch it if you haven't seen it before. I'll put the link for in the description. But essentially in that video, I explained why Robert Prechter believes that we're likely heading towards a bear market this year. And again, go and see that video for more details. So that essentially is Robert Prechter's point of view. By the way, I think Robert Prechter also wants to see this level being taken out as well. I think he mentioned he wants to see these levels, this red level also being taken out for further confirmation of 33,843. So let's wait and see if this level, this range, gets taken out first, just to be fair to Robert Prechter. However, guys, here's the thing. I'm not as bearish as Robert Prechter, as I explained to you in my previous video. So even though I respect Bob Prechter, I think he's a fantastic analyst, I have a slightly different point of view. So let me just first of all say this. The reason I'm not as bearish is because, firstly, the S&P has not yet confirmed this. So notice the S&P 500 here, the chart of the S&P here, has not yet fallen below the lows of October. By the way, the lows of October is 4,300. So we have to wait and see if the S&P can confirm that by breaking that support low at 4,300, the closing lows of October. Also, one more thing. The Dow Jones Transportation Index, the transports, have not confirmed this either. As you can see, the transports are still above the October lows here. So we would have to see a break below this level, if this level breaks, that is 14,000, before we can have a confirmation of what we're seeing on the Dow Jones Industrial Average. That's according to my analysis, in any case. But by the way, let me show you one more thing. Very interesting thing here. Look at this. After the Dow Jones Transportation spiked, look at this. When it spiked here, like this, look what happened. We had an extreme acceleration warning, as shown to us by this red acceleration extreme warning sign here. And that usually, when this happens, often when we see a strong rally and a spike like this, like the one you're seeing here in the transports, with a red extreme acceleration warning, that often shows a potential blow off top, which is the opposite of capitulation, which can be a negative sign. Okay, let's go back now to the chart of the Dow here. So that's one reason, guys. That's one of the reasons why I'm not as bearish as Robert Prechter, because again, we have not seen confirmation yet on these charts. For example, the chart, the S&P and the transports. But here's the thing, guys. So my perspective is that I think we're seeing a temporary correction in the stock markets, but not so much a bear market. But also, let me say this. Even if the stock market, the S&P, were to fall below the October lows, if the S&P was to confirm the drop and the break on the Dow Jones, I still don't think we're heading towards a bear market this year or in the next few months. Now, the reason I've explained this in much more detail in the members video, so watch the members video for more details about that. But let me just say that even if these levels get broken, even if the S&P was to drop below the October lows, then if that happens, what that potentially might mean, in my point of view, is that we might see a more prolonged and perhaps a more deeper correction, but not necessarily a bear market. Now, I could be wrong about that. Let me just say I could be wrong, and it's possible that indeed Robert Prechter could be right. Again, I'm just not as bearish as he is, but again, I respect his point of view. But let me also say this, guys. I secretly hope that Robert Prechter is right. I actually would love it if Bob Prechter's prediction about a bear market comes out to be right. So even though I think it's less likely, I would love it if he's right about this. Because guys, there's so much speculation out there. There's rampant speculation and greed and just over-optimism. There's been a lot of over-optimism and greed in the market for the last several months. So I would love it if the market did something that nobody expects. I would love it if the market upsets the system. And guys, listen, I don't want to get religious on you. Again, I apologize if this sounds a bit religious. But God, if you're listening up there, please let Robert Prechter be right about his prediction about a bear market. I would love it if that came true. In the words of Richard Burton in the movie The Medusa Touch, I don't know if you've seen this movie, it's a fantastic movie, go and watch it. But as Richard Burton says in that movie,
I will bring the whole edifice down on their unworthy heads.
Yes, absolutely, I agree with that. And in the words of Jesus in Mark, those who are first shall come last, and those who are last shall come first. What does that mean? It means those who are at the top shall go to the bottom, and those who are at the bottom shall go to the top. I can drink to that. Thanks very much, guys. Bye for now.